All right, for more on the Twitter saga, we have Brian Fitzgerald, Wells Fargo senior equity analyst here with us. Brian, nice to see you. It has been a wild ride here between Twitter and Elon Musk. How do you think this story ends?
Yeah, thanks, Dave. So look, as you and Alexis just talked about, I think we're at a bit of an impasse right here. The way the current situation is set up, Twitter will tell you, we are sure, they just did this yesterday to the media, that less than 5% of the content on our platform is bots, spam bots. We do human reviews of over 100,000 accounts on a quarterly basis. They've been doing this for years. It's always been a thought with Twitter. And so there's one side who says we're not budging. And then you have Elon who says, look, Twitter gave him a fire hose of data back when he first said he was putting the deal on hold. They've gone through all those data points, all that data. But they're missing one key linchpin, and that's the PII data, this private or identifiable information, email addresses, names, phone numbers, IP addresses. Twitter will never give that up. They can't give it up for privacy reasons. So here's where the impasse is. Team Musk is confident that, hey, we're never going to be able to verify what that bot percentage is because we don't have that final piece of information. So we're kind of stuck. And as you and Alexis just talked to, I think this ends up in the courts.
So then in terms of Elon Musk then waiving due diligence, how much of the responsibility on not having this information beforehand, at least some of it other than the information that you just mentioned, how much of that actually falls on his shoulders?
Well, Rochelle, it's a good question. I think at the end of the day, it really isn't about the bots. As a matter of fact, that was one of the original reasons for doing the deal. He said, I'm going to buy this platform. I'm going to clean it up. Obviously, this is Team Musk articulating for a lower price. There are very few precedents of that actually happening. Maybe we had one real time or more real time recently with LVMH and Tiffany during COVID, where they articulated for a 5% price cut. The original deal was $54.20. We are far from a 5% price cut there. I think if you look at the percentages of does a deal close, does a deal doesn't close, and let's look at the $32 price prior to the deal announcement, say it's 50-50. That's 50 times $54.20, 50 times 32. That gets you to a $43 price target. That's pretty far below a 5% discount. What the market is kind of telling us now is 20% deal happens at $54.20, 80% it doesn't. Do the math. That's about a $36, $37 target. That's where the price is today. So that's what the street is telling us is, hey, we don't think a deal is going to get done, or we don't think it's going to get done at that price target.
And not a lot of arbitrage play there. The stock went up to $51.70 shortly after the offer was made. And to your point, we sit below 37. Where is it headed?
That's a good question. Meanwhile, I think Twitter is still operating as usual. They're focused on running the business. It's a real business. $6 billion in revenue, $1.5 billion in EBITDA, good free cash flow, $350 million this year. So it's a good business. It's currently trading at 19 times this year's EBITDA, 15 times next. It's growing that EBITDA at 18% over the next 3 years. So, it is cheap right now relative to the fundamentals. They are doing things to improve the efficacy of the platform, to improve targeting on the platform, to speed up the amount of innovation they're doing. Those are changes they've been doing over the last 3 to 5 years. So they are executing to the tasks at hand. I think when you look at Musk's goal of 600 million MAUs by 2025, that's aggressive. They would need to grow at a 27% CAGR to hit that.
And obviously what he's doing with Twitter also affecting what we're seeing with Tesla prices. How much of an irritant is this for Tesla shareholders as they're watching this back and forth and seeing this focus with Twitter?
Well, I don't cover Tesla, but what I can say is, a very smart, intelligent person with multiple irons in the fire, and so it's got to be frustrating when you see him split focus this many ways. Ultimately, I think it's a balancing act with respect to Twitter in terms of free speech versus monetization. Free speech is an important Twitter principle. I get why he wants to do this. It's important for Twitter as well, but you have to weigh the health of the platform, the tone of the public conversation on the platform versus brand safety and suitability for advertisers. So ultimately, that's what makes the magic work at Twitter. For a Tesla holder, it's probably frustrating that that we're being drawn into this drama show.
Dan Ives from Wedbush told Yahoo Finance he thinks it's a 5% chance that Elon goes through with the deal at this price, as is. What number do you put that? And the Financial Times had some interesting language from the CEO, Parag Agrawal, that they're willing to go to war to get this deal done. What do you make of that?
Well, so first off, your colleague Brian Sozzi, he did a great interview with Twitter chairman Brett Taylor. He thinks the deal gets done, and he says Twitter has never been more relevant. To Dan's point, I think that's what the market is saying. If you did that math I ran through, 5%, that'll probably get you to where the stock would go to. So right now, if you did the math, just looking at the numbers at 32, that 54.20, that 5% that Dan has and 95 at a cheaper price would probably get you down to $32.
That's definitely one we'll keep an eye on. Thank you so much, Brian Fitzgerald, there, Wells Fargo Senior Equity Analyst. Dave?